Hey traders, Park again with another indicator. Today I'll be introducing you to the divergence box indicator. If you're familiar with divergence, basically what it is when an indicator makes a new low while price makes a new high will be bearish divergence, and the opposite will be when price makes a new low and the indicator makes a new high, that declares bullish divergence. And what the indicator, if your indicator is using close, and that's basically what it's really showing you. Like right here, let's see, this is DWAC. I'm just going to bring the indicator on and it'll find it for us instead of me trying to find a candle. And Thinkorswim was acting up again, so let's play it. And let me see what happens. Yeah, there we go. I don't know why Thinkorswim is funny like that. But found divergence right here. This is bullish divergence. The price made a new low, but close made a new high. This is the previous close. And this is bearish divergence, but it's pulling it away from over there. If you haven't watched my video on the supply demand zones, Thinkorswim's on demand feature is being finicky again. But what I wanted to show you was how the indicator works. It finds divergence in price, not using RSI, not using stochastics, not using any of those other indicators, but price alone. And that's exactly what it found right here. As you can see, it found this divergence and price popped up above the bearish divergence, but it ran right into that past bearish divergence, which it couldn't break above. And this is on a 1 minute chart. So yeah, you're going to get a whole bunch of boxes from the previous divergences. And let me switch back to the 5 minute. And I don't know why it's pushing my lines out there like that, but it doesn't do that on live. But it's doing it on the on-demand feature. So I'm going to push it down to today. Or yeah, I'm going to push it down to today. And it's still doing it. I don't know why, but it's doing that. But normally it doesn't do that. So on the 5 minute, it found this divergence and price found it as an area of support. It had to break above first this old area of bearish divergence. And this is also the current area of bearish divergence, which is magenta. This is the current area of bullish divergence. And this is the previous areas of divergence. And it just brings it over as long as price is above it. And I'm going to switch this day back to at least 1 day, so we can get this previous area of divergence down here. So if this is that Trump stock DWAC, so if you were playing it on October the 20th and you got this divergence box here, you would have used this to get in at this level at 1045, and you could have rolled it up to you got another bearish divergence happening. Or you could have just stayed in the stock and let it ride up. But for me, this helps me get in below VWAP. Normally, I won't get in the stock below VWAP, but it's a good indication. So I'm going to push it forward in time. And that somewhat corrected it, but I don't know why it's doing that. But anyway, it's showing the correct levels, though. So you get the price level of our resistance, and you get the support level of 1186. And that's exactly what happens. So you get the bearish divergence. So you were expected possibly come back down here, but that's not always going to be the case. When using this indicator, you probably want to use it with another indicator. And usually when I'm using it, I will use my RSI 50. And usually I really won't get anything unless RSI is above 50. And these white dots are what I was referring to before is divergence. My RSI is using the close for RSI. And I don't like using move averages, or I don't like averaging my RSI. I mean, using average numbers into the RSI. Normally, RSI is set at 14 periods. So I just got rid of the periods and I just put in the average of RSI. So you get the average instead of an average of a 14 period. I'd rather just use whatever RSI true average is. And that's why this is supposed to be called a true RSI. But you got a bullish divergence as well right here. You got a bearish divergence. You got a pause in price, but RSI kept pushing up. You got another bullish divergence. So it found the same divergence. And that's why I was saying before about divergence with an indicator versus divergence with price. And you're not always going to get this, but because my RSI is based off of close, and it's based off of just the average of RSI or average of the price instead of a 14-day period RSI like everyone else uses, you would get these same signals. And long as RSI is above 50, and if you look right here, I would put an actual line right here to see if it's gonna drop below it, and if it doesn't drop below it, I'll stay in the trade. But right now it's oversold. My oversold is at 80, and my my overbought is at 80, and my oversold is at 23.6. 23.6 is a Fibonacci, and I lied. My overbought is at 78.2, which is another Fibonacci level of ratio actually. And you got the 50 line with this RSI. So I'm going to let it play, but I'm going to fast forward it. And I just wanted to show you the power of the indicator. So I found another area of bearish divergence, and it's supposed to be plotting, well, as long as price is above the previous bearish divergence, you're not going to get a box there. And that's what I like about my indicators. They go away unless price goes below that area of divergence, bearish divergence. It's not going to reappear. Like it went away right here. This is bearish divergence, but it's pulled it away from over here, which is a previous area. That's why it's pink. And as long as price is above it, it's not going to show up. And the same situation with the bullish divergences as well. As long as price is above the bullish divergence, it's going to show. But if the price drops below this divergence or that divergence, it's going to go away. And I'm just going to fast forward it. And it found an area, found two areas actually, a bullish divergence. You got that uptrend. You had the buyers, you had sellers trying to sell it all the way back down, but buyers stepped in, created another areas of bullish divergence. My RSI is showing the same thing. Like I said, my RSI is not a 14-day period RSI. It's just the average of price itself. And it found both those areas of divergence. And I guess I'm using exponential RSI. Normally I use simple. So we're just going to fast forward through it. And this is all about me just showing you divergence within the RSI. I mean, yeah, divergence, what the indicator shows you, areas of possible support and areas of possible resistance. So, and if you don't know much about divergences, you can go to Investopedia. I'll leave a link in the description of the video. As you can see, these are the previous areas of bullish divergence. Each one of those white boxes are areas of bullish divergence. And you see you don't get any of those old areas of bearish divergence because technically they're no longer there unless price moves below them. So we're going to keep pushing. And that's exactly what happened. You got to pull back. and you also got this areas of bullish divergence as well. And we're gonna wait. RSI is dropping below 50, which for me, that'll be a tell sign for me to go and get out. And if you look the price line that I set, RSI never dropped below. It bounced off of it right here, but it finally broke it. And for me, I'll go ahead and get out of this. But I would still look for it. And you got another area of possible bullish divergence or bearish divergence, depending on when this candle closes. And I really like my RSI. If you looked at the regular 14 period RSI, it's not going to look like this. And my RSI is colored according to Heikin-Ashi and volume average, whether it's below or above volume average. And we pushed, and like I said before, if it drops below the box, it goes away, but it popped back up because price got above it, close got above it. So now it's showing you an area of possible support. So we're gonna push it again, and that's exactly what happened. Look at exactly where price used as a launching pad and popped right off of it and broke above this area of bearish divergence. RSI is hooked up as well. That was another thing from the bullish bearish community. They talked about RSI hooking, or the move averages hooking. And that's exactly what you're getting. But looking at this, you're getting it all on low volume. I had Mike ask me about my VSA, volume spread analysis indicator. I'm still not done with it, but I'll show it again. The true volume spread analysis lower one. And it's going to color price to give us a better indication of what's going on. But I'm going to have to take it off because it sucks up so much data when it comes to the on-demand feature. And if you look at price, you can see as these two candles were high, I'm trying to remember what it was. Higher than average volume, so they were ultra high volume, and that's what you would normally expect when the first candle of the day, or even the second one, ultra high volume. And this one right here is less than average volume. You can see from the volume down there. And yeah, basically that's what you're saying. You got high volume right here, ultra high volume right here, lower than average volume, lower than average volume. This is way lower. This dark green drab green color is way lower than average volume. This is below average, but this is way below average. This is above average volume, and this is ultra high volume. And normally when you get something like this is ultra high volume, you want to be careful when it's at the top. And that's exactly what happened right here. You got an irregular body, a smaller body than the preceding one, with more volume than was on the other one. It's not showing that right here with the volume level, because this is actually taking the candle close minus the low and the candle high minus the low, candle high minus the close. But the volume here is greater than the volume preceding it. And that's why you got this irregular body right here. No, I apologize. This body is smaller than the one before, but is above average volume. And that's why you have this candle right here. And it's a telltale sign that there's possibly going to be a pullback. You just have to wait and see. And then you get this area right here where buyers and sellers were doing a tug of war. Buyers won, but sellers came right back in to bring it right back down. So I apologize on that. If you haven't watched my video on irregular bodies, there's another indicator, but I built it into this one as well. And I put a squeeze indication as well. And these arrows on the VSA indicator, what they're saying is they are above the bands, deviations for the volume. And those are indicators. If you find them at going towards the low, you can probably expect the reversal. But going into an uptrend, you could want to be careful because they can be indicators of possible pullback. And because price and volume hadn't come in a whole lot, and they were showing you before the before the open of the day, you could have expected exactly this, a big push to the top. And if you haven't watched the video, the blue candles, they're also irregular bodies, but they're below average volume. And this right here is a squeeze indicator that I programmed into that. You'll need a RSI or another indicator validate, and you will wait till the squeeze in to actually enter into the trade. And we're going to push it forward again. It may have got halted that day. And you actually got a squeeze right here, but it was a squeeze to the downside. There we go, Thinkorswim. Push the head. If you remember, our old bearish divergence was back here, and it's no longer there anymore because price moved above there and it's chugging along like the train. You had this above average sell candle right here, and price is going down, and you got this bearish divergence as well. So you can expect another pullback, and then you got bullish divergence, but you have to wait for that candle to end. So we're going to push it forward again to see exactly what happened. Come on, Thinkorswim. There we go. You got that. That candle finally closed, and you got this area of bullish divergence, and it's using it like a launch pad to test this area of bearish divergence again. But it's all on low volume. So I wouldn't expect it to push up, but it may push up all the same. And if you see my volume, it actually stacks, actually sell volume stacks on top of buy volume. I got the idea after watching or one of the indicators, the rips that we're using, that shows buy volume and sell volume. And I basically took that and made it my own as well. I took the idea and made it my own. And here's another candle that broke above the deviations. And it did in the uptrend. You got your pause. And the same thing happened right here. You got the one deviation, and you have the yellow arrow that shows two deviations above normal volume. And this is another register of volatility, indication of volatility. So we're going to push forward again. And with anything, this works a whole lot better on the higher time frames. So I'm going to push it to, let's do a 15-minute, 3-day 15-minute. And it's showing right now, you had a bearish divergence back here, but it's not showing any divergences back here. So on this right here, on the 15-minute, you got these two areas of divergences right here. But you got this irregular body right here telling you that price is being straddled. Even though the sellers won, it's a small, tiny candle with little or no, with a lot of buy on it. So you wait for the next candle to pop up, And that's exactly what happened. Price stayed above VWAP and kept chugging along. So we're going to push it to the 30-minute. We do 30-day, 30-minute. You had a bullish divergence back here, and you had your bearish divergence back here, and you had a bullish divergence at 17 and a bearish divergence back here at 20. And this is what I meant by it sucks up a lot of data, because it's having to go back and dig for all this volume. So it's changing. So the Thinkorswim on demand feature is not going to work really good with this volume indicator. So we're going to go ahead and push it to the daily chart. And you're not going to get a whole lot on DWAC. So I'm going to come out the on demand. And this is what DWAC actually is today. It found a couple of areas of bullish divergence, and a bearish divergence knocked it back down. Bullish divergence, bearish divergence, and it just knocked it back down. One of the stocks I'm interested in is PROG. I don't know if you're familiar with it, but it's actually crashing through a long time bullish divergence right here. You can see it hit right there, and that bullish divergence came all the way from here, which is October 22nd, which it popped off of, ran right back into this area of bearish divergence, and right now it's struggling and made another area of bearish divergence. And if you look at the RSI, it never got above 50 in any occasions. Right now it's way oversold. And one of the things I still don't understand is all this low volume drove this price down when you have absolutely only one high down candle, high volume down candle. The rest of this crap is all low volume. And you can look at it all from here. And the RSI is it's just been oversold. It had a couple of days where it popped above 50 over here, but it hasn't popped above 50, so it has no momentum in the stock. But what I wanted to show you was a 21-day average, and this is the day's average. This current day average of the 21-day average percent. And this is the 10-day average, and this percent right here is the current average percent of the 10-day average, and this is today's volume, which is the same as the current. Because if you look at this on a lower time frame, you're gonna get one for each bar. The current is gonna be for each bar, but you have your daily volume, and this is your daily average, average volume. And for me, this is an indication of volatility. And for today, 44% of this candle was, let's look at it. 44% of this candle was sell side. The rest of it was buy. So that's what this is indicator of. That 44% of this was sell, while 60% of it was buying. And this is coming out of a squeeze as well. And it looked like they wanted to send it to the downside, but the buyers. And one of the other things, like I said, this is the indication of this is 80% of the 21-day average volume on this candle, which for me is an indication of volatility. And I'm hoping, really hoping for this stock to get pushed up to the upside. And we'll probably have to wait till January to actually see how everything pans out. But once again, this is a demonstration of the divergence indicator. I just threw on these other ones to give you an indication that you need these other indicators to validate what's going on. And this is presenting these 5-minute chart, and you can see it found this area of bullish divergence, and stock basically rode that area the whole time, created another area of bullish divergence, and like I said, used it as a launch pad, which is right here along with VWAP, jumped up, hit all this bearish divergence that was up here from this morning, or was it possibly, well, actually yesterday or last week's. So, and that's what you're looking at right there. So let's look at another stock. Let's look at AMC. And let's look at it from a longer time period. So I'm going to put this on 10-day, 15-minute, and let's see what we get. Bullish divergence, bearish divergence, huge candle came from over here. I mean, this huge box came from over here. And all these divergences came from the past. And let's push it to the 30-minute, 30-day, 30-minute. And that's what you're looking at. You had all this bullish divergence, new area of bullish divergence. And let's push it to 90-day, 4-hour. And let's see what we get. And buyers really bought this up. And it's a 1 deviation. And AMC is just holding right there. Holding in this area of bullish divergence, but it can't really break above this area of bearish divergence. And that's exactly what happened over here. It hit this area of bearish divergence. Coming from this area over here. And we can go to the daily chart. And it had all these bearish divergence, bullish divergence. And you had bullish divergence right here coming from this candle on the 14th of December. And then you create another area of bullish divergence coming from this candle, which is this box. And you hit up here, but it couldn't quite get above $30. Or it did get above $30 a little bit, but it came right back down, create another area of bearish divergence and bullish divergence here as well. So hopefully AMC in the coming year will be moving up as well, and GME. And I will get rid of all those drawings so we can actually see the boxes. Same situation, almost same chart. And let's go to yes, E-minis. Come on, Thinkorswim. You got this big area of bullish divergence way back here. Found that divergence somewhere on one of these candles. Probably this high volume candle on 10/1. Yeah, October 1st. So you got all this bearish divergence up here, bullish divergence, and another bearish divergence right up there. And Tesla. Bullish divergence, it popped up. Buyers came in, but it wasn't able to hold. It broke through, went away. Another bullish divergence candle up here on the Fibonacci 50. And you have this that came right back and is used as a launch pad to pop back up. And you got another area of bearish divergence here on, what is this? Today is Wednesday, so this is Tuesday. And you got bearish divergence here at the 1173 as well. And you look down here, 77% of the 21-day average. For me, it's volatility. Even though, you know, most of this candle was to the buy side, but it's way, way below average on volume. And that's why you got this drab green color. So I think everybody, like on the pre-market show for Benzinga, saying everybody's waiting for January. And I didn't mean for this video to be this long, but this has been the divergence box indicator, and it's basically using price to use divergences with my RSI, true RSI 50 and true volume spread analysis indicator. I appreciate you guys sticking around this long, and like I said, I didn't mean for it to be this long, but I hope that I was able to give you all the information about the indicator that you may have wanted or needed to make a decision about whether it's for you or not for you. And I always appreciate your feedback. If you have any other questions, just email me or leave something in the comments section. Yeah, I'm just checking the squeeze. And it was a failure, squeeze failure, right back down to the downside. And what did RSI tell you? It was telling you you got high volume and a low volume, and the squeeze failed. RSI dropped below 50, but didn't go oversold. Another squeeze happened. Squeeze ended, popped up, and RSI showed you the same thing. RSI was already moving to the upside. When squeeze ended, boom. Even though it paused, came back to the VWAP, pushed right back up, but it found this area of bullish divergence, and I would wait for RSI to push above 50. And RSI pushed above 50 with high volume, but that's probably shown with the Heiken-Ishi stuff. But that's it. I appreciate you guys' time and watching this. Y'all have a great day, and I wish you well in your trading.